this video, let's talk about the VIDYA, the Variable Index Dynamic Average. As the name suggests, this is a dynamic moving averages that adjusts its smoothing factor based on the market volatility. So when, for example, we have a volatile market, the indicator decreases its smoothing factor. But when the market has low volatility, the indicator increases its smoothing factor to help the traders to attempt and avoid fake signals. This is a brilliant indicator. So let's see how it actually looks like on the chart and how do we use that. So the first step, where do we find the indicator? We go to the indicator section, we go to the folder of other, and you can see here on the bottom, third from the bottom, the VIDYA indicator. By default, it is applied to the 14 bars, the 14 periods, without a shift and with the sigma of 0.65. This is a factor that will help with the smoothing factor, and it is applied to the source of close. You can adjust the lines, the style, and the thickness of your preferences, choose the visibility, what in time frames, chart types, and all that you would like to see. And if you would like, you can add levels. So you can click OK. I already have it on the chart. This is what you get when you apply it to the chart. How do we use that? So first of all, like with any moving average, the idea is pretty much straightforward. When the moving average points up and the price is above the moving average, we are in bullish market conditions, we should be looking for buy trades. Okay, so the idea here, once again, especially strong in trending conditions. So for example, we have higher highs, higher lows, we got the price going below the VIDYA indicator, going up above that again, and not just the price is above the moving average, but also now we can see the VIDYA indicator climbing up and increases its pace. Beautiful automation here that gives us the understanding that there is a volatility. The market is getting the momentum. This is a great sign for further continuation. In the bearish market conditions, we would like to see the price below, like in that place below the VIDYA, and the VIDYA gaining its negative slope, negative momentum, and that means that while we get the crosses up, we are very likely to push the prices down again. Now, if you take a look on slower conditions, that's what you will get. Look at this indicator, flat. Look what happens here, almost flat, right? Look what happens here in all this time, flat. It helps to avoid noises, fake signs. These are the conditions you would not want to trade as a trader. That's what you would want to avoid. And that's where the indicator comes to help us. And on the other hand, when the slope, you can see how steep the slope becomes here and here and here. When we gain the momentum, that's the places for us to say that, aha, that's the time to trade. Look for the buys here. And on the other hand, when we are below, look for the sells. The next step, I would like to compare that to the very simple moving average so you can see the automated smoothing factor and how it helps you. So let's go to the indicators, type moving average. We will choose the simple moving average with the same logic of the source close and the periods 14. And look, oops, let's change the color. Let's make it yellow. And you can see what happens here. Okay, while the simple moving average changes its slope in many times in a wrong way, here we actually see faster reaction to the market based on its volatility. Look how quicker the VIDYA indicator changes to negative here, getting the slope and give us the hint that the sellers are likely in control. And similar to here, look how quicker it is, the reaction here and the slope that help us to understand That's where the momentum is, that's where the volatility is, that's where we would like to trade. And if you enjoyed this video and would like to enjoy more trading insights, trading tips, indicators, so much more, make sure you follow this channel.